Broadcast is now starting. All attendees are in listen-only mode.
Good morning, everybody. Thank you for joining me here today on this beautiful Friday morning. My name is Aly Campbell. I am one of the annuity sales directors here at Insurance Agency Marketing. I am joined here today with Paul with National Western Life. Before we get going here, I just wanted to say thank you all for joining us. I know you guys all have busy schedules, so we really appreciate you guys taking some time to join us on this webinar. Also, if you have any questions during this webinar, just jot them down and I'll follow up with each one of you later today to answer them. Also, before diving in, we're going to go over a few housekeeping things, some stuff we offer to our agents here at IMES. So we'll go ahead and get started. So first, just as you guys know, referrals are what help you grow your business. They are also important to us. So with our referred producer program, we pay you $50 when any agent of yours contracts with us, and then we continue to pay you 20 basis points for every time they write business with us. So it's just one of our ways of saying thank you for helping us grow our business on our side as well. We also have marketing reimbursement dollars. So every $100,000 of single premium life or indexed premium submitted is $100 in your marketing reimbursement account. So that's not anything we're cutting from your commissions or anything like that. That's just, again, us saying thank you to you for submitting business with us. Next, we also have our new producer bonus. So you qualify for this within your first 6 months of being contracted with us here. As you see, there's 3 different levels that you can cash out at based on your production. So $100,000 level, $300,000, and $500,000 level. So there's anywhere from $750 cash bonus or a new iPad to seminar packages or a Ritz-Carlton package for you and a guest that you can earn here. So some pretty awesome prizes. Next, we have a great back office support team here. So our number one thing here is service. As you know, we have a 3-ring guarantee. A live person will always answer within 3 rings during business hours here. We also always say submission to commission, so helping producers save time with case design, product selection, illustrations, all that good stuff, all the way to getting contracted, submitting business. And then Amber's new business team, they do a great job here of scrubbing applications, making sure we're sending the carriers the applications in good order, and then following up all the way until the application has been issued and policy has been delivered. We also have our creative marketing solutions team here. So Jacob and Sean and Aaron, they do an awesome job with logo designs, creating flyers, building websites, basically helping you brand yourself in your community. So here is going to be one of our first poll questions. I'll go ahead and launch this. Would you like more information on IMES Creative Services? They can help you with any flyers that we send out or handouts that you've seen from us. If you want to brand that with your own logo, that's something that they would happily do for you. They do an awesome job of helping with producers' websites, creating websites, newsletters, all that good stuff. So go ahead and answer that poll question there when you get a chance. I'll keep it open for about another 30 seconds here. Again, if you are interested, that's always something we can do is set up a phone call between you and any of those 3, and they can answer any questions you have. Okay, I'll go ahead and close that out, and we'll move on. So our IMES website, if you have not been on our IMES website, I highly encourage you to do so. You'll find a lot of great tools on there. We have different quoting tools. So a term quoter, the income writer comparison. I use that a lot whenever I'm sending out illustrations to agents and they're wanting to know what is going to be the highest guaranteed income a client can get. Well, if you go on there and use the annuity rider comparison, that's going to tell you exactly which carrier is going to produce the highest guaranteed income. So really helpful tool. There's also, we have a sales resource library, and that includes tons of great client brochures, fact finders, different financial calculators. So that is an awesome tool as well. If you have not taken a look at that, I encourage you to do so. Next is IMS Wealth Management. So they are our own RIA that we have here in our office. The number one thing here is helping you with client retention and being able to offer a full range of services to your clients. So this is a great opportunity for anyone who's looking to get their Series 65. It is all fee-based, so that is something as well. This is going to be our next poll question. So would you like more information on IMS Wealth Management? I'll go ahead and launch that. A good example is, say you have a client and they have $300,000, and let's just say, well, the annuity suitability is only going to take $150,000 of that. Well, you have $150,000 that are left there on the table. Instead of having to refer them to someone else that can help them with their investment side, this is a great opportunity so that you can keep that $150,000 under your control instead of having to have them go find someone else that might end up taking all their business. So go ahead and answer that poll question. I'll leave it up here for a little bit longer. All right, I'll go ahead and close that out. So our Life and Annuity Academy, this is our 2-day producer training. We actually have one going on right now in Des Moines. It's finishing up today. So this is a great opportunity for people who are active in the life and or annuity markets looking to increase their sales. It's all expense paid, so we have about one a quarter. So a lot of what we talk about there is it's not so much product based as it is sales based. We bring in some of our top producers. They kind of talk about how they got from A to Z in their business and given ideas, sales techniques, things like that. So it's a really awesome way to learn different ways to market yourself, different concepts that you can use. So our next one should be sometime next quarter. So if you are interested, keep a lookout for the next dates. So our next Producers Escape is going to be in 2021. The location, we're still deciding on that. That's going to be coming soon, but I can promise it's going to be something you won't want to miss out on. The qualification period for this is going to be, it was started July 1st of 2019, and it's going through December 31st of 2020, so the end of next year. So still lots of time to qualify for that. If you are interested in getting some more information on that, just let me know and I will get that out to you. So now we are going to switch over to Paul's presentation. He has an awesome presentation set up, and we're going to be discussing some of the competitive income riders and fixed index annuities that National Western Life has to offer. So let's switch it over to him.
Ready to go, Aly, when you are. Man, that is amazing. The resources, all the things that you have, resources, training, marketing stuff. Man, must be great to be a marketer with IMS. Fantastic.
Oh,
hey, all right. I'm pleased to be here with you. I'm Paul Garofoli, Vice President of Annuities with National Western Life. And I'm going to talk to you about income planning, income rider. We're going to front load some of the nitty-gritty detail, but the majority of this discussion, ladies and gentlemen, is going to be about practical income planning. I get to talk about my 3 favorite subjects along the way. Number 1 favorite subject, me. I'm going to talk about how I've used annuities and income riders to be a foundation for my plan. Second, I'll get to talk about my family. And then third, I'll get to talk about my company, my 3 favorite subjects. So let's do this, though. Let's talk about what National Western Life has to offer on the design side. And I think this is important even in an income discussion, because the accumulation, the underlying performance of the fixed index annuity to which you have attached an income rider is critical. I think sometimes we forget that an income rider, the guaranteed longevity benefit provided by carriers, is based on the greater of the payment base or income value or the actual accumulation value. And I think sometimes that's forgotten, particularly in the era of lower caps, lower participation rates, low interest rates. There still is the potential at times for the accumulation account to outpace the income account. We hope that happens. And when it does, you have the ability, your client has the ability to do two things. One, if at the time they're triggering income and the accumulation value is higher, then they can automatically use the accumulation value as their income base. That's great. In addition, what we do at National Western Life, I believe other carriers do it as well, but we do it, which is if at any point in time your accumulation value is higher than the income value, after 5 years, you can in essence reset your income value to the higher of the accumulation value, and then the guaranteed roll-up, which in our world is 5% for the first 10 years, can continue to grow on that. So that's real key. Now, relative to performance potential, National Western Life is known for offering uncapped index strategies. Indeed, even during the financial meltdown and some of the challenges that carriers had, we always had uncapped indexing. So we're not new to it. We've always had it. So for example, on a traditional monthly average annual reset, I've got participation as high as 90%. I've got a range of products with this strategy. This is the highest. We've also offered a 5% volatility control based on the S&P 500, taking the lowest 100 volatility impacted stocks. We have up to 135% participation on that. And then we have a very unique strategy. I don't think anybody else is offering it. It's a global look-back strategy, which is a blend of the multiple international indexes, the Hang Seng, the Nikkei, the London Interstocks, and of course the S&P 500. All of these strategies are uncapped, and all of these rates are excellent. They are enhanced for the first year, and we will typically fall back to the field. But I think it bears mentioning that we're one of the few companies that offer a higher guaranteed minimum participation rate on our featured strategy. In this case, the option U, the volatility 5% daily risk excess return strategy that's really performed pretty consistently over many, many years. The minimum participation that we will renew at is 70%. That's really solid, particularly in a world where you're seeing participation rates of 25, 30, 35, 40%. Really strong, a real great opportunity for you to have the potential for performance and consistency over time. Now, Aly, we also promised to talk and feature about income riders, so I'm going to get to the meat of the matter, what we have to offer in income riders. And this is one of the things that makes National Western Life so strong. Now, Aly, I'm going to make it easy for you and your agents. You can use that income rider comparison tool, or you can just use our products with income riders, because we are the #1 solve typically in years 1 through 5. So if your client is likely to trigger income in the next 5 years, we are the company of choice. Our combination of bonuses, the roll-up, the high rates of withdrawal make us very, very strong. As you go to year 6, 7, 8, 9, 10, we're still going to be competitive. And then with our unlimited restarts and unlimited compounding, we can offer income growth for 20, 25, 30 years. So let's get to the matter here. First of all, we offer income riders, not income products. And I think this is an important distinction. A lot of carriers are segmenting their product population. They will have some products and they will tell you, hey, these are for income. And then these products over here, these are for performance. And we got other products for liquidity. We don't do that at National Western Life. You can preserve the underlying features of the fixed indexed annuity, bonuses, liquidity. You might like the strategies. You might like some of the other riders associated with that, and add an income rider to boot. So you have that as well. So you're always preserving the underlying product features. In addition, we have what I think is a real world, makes sense roll-up of 5% for the first 10 years, and then some of the highest rates of withdrawals. And I think a lot of times we get distracted as advisors when we hear about the big income roll-ups. This is going to compound at 7, 10, 20%, 30, 45% income value bonus. Come on now. Does that make sense? Is somebody actually going to give your client on a $100,000 deposit $45,000 real dollars? No. It's a value. It's a gimmick. Now, what I say, use Aly's comparison tools, and you'd be surprised. I was amazed. I've checked it out. When we look at some of these bonused income products, my income payout is better, and I'm not offering a 40% bonus. So always look at the number that matters. It's what the client is going to get guaranteed. If you do that, National Western Life will typically stand out. Now, we have a variety of riders. Our two feature riders are the Income Outlook rider. That's 5% for a 1% fee. But this is critical to understand. We will waive that fee if there is no gain in the contract. And I think this is a hazard for us that embrace income riders, because we're not accounting for the impact of fees on the potential accumulation value for our clients' accounts, and also the psychological impact of those fees as the client gets their annual statement. So with this rider, 5% growth on the payment base, a 1% fee, but only paid when they make money. If they have a zero hero year, there is no charge. And we will never recoup the charge in years where they do get performance. What this effectively means, if I start with $100,000, no matter what, I'm going to get and preserve that $100,000 at all times. There will not be an invasion of the premium outlay. If I do make money, whatever net gain after the fee is deducted is protected as well. Now, if you want some sizzle, we've got an income rider called Income Outlook Plus 5 that has a premium bonus. Now, you said, Paul, don't get distracted by premium bonuses. And I say, yes, don't get distracted by premium bonuses, because the bonuses on most of these other riders are not premium bonuses. They're income bonuses. They're not real money. It's phantom funds. With my rider, Income Outlook Plus 5, you can get a true 5% premium bonus that is recognized and manifested in all aspects of the annuity, in the death benefit, in the accumulation value, and certainly in the payment base income value. Now, you get what you pay for. I caution you, this rider has a fee of 1.5%, and we do not waive that. So if your client is focused on death benefit potential, or is likely older and wants to trigger income soon, and really doesn't matter what the accumulation value does or the impact of fees, then this is a way to go. Just boosting everything by 5%. And not only that, you can add this on top of any bonus offered within the product. So for example, we have bonuses in our products as high as 9%. So you have a 9% underlying product bonus, and then a 5% additional bonus. That's 14% in real money bonuses. You have start with 100,000. You're at 114,000, compounding at 5%. If something should happen to the client, the death benefit is 114,000. Those two values, the bonus value on the annuity and the bonus value on the rider, will earn whatever rate of interest the product returns. And then, as I mentioned earlier, we have some of the best payouts. This is a little bit of the David Copperfield technique that a lot of carriers used over the past years. If you've been paying attention, what they've been doing is lowering their rates of withdrawal, their payout rate. They focus on the roll-up rate. Great. But it's the payout rate that sometimes is even more important. For example, at National Western Life, at age 60, my withdrawal rate is 5%. At 65, 5.5. At 70, it is 6%. The other guys, many of them have lowered their rollout rates, their rates of withdrawal. At 60, they're at 4.5, 4. I've seen even 3.5. That is critical to determining what your clients get. And not only that, in terms of payouts early, we're also great on payouts later because, as I mentioned, we have unlimited compounding on our income riders. What's overlooked sometimes is that many income riders will stop compounding after an initial period, 10 years, 15 years, 20 years. What this means is that you can offer income riders to younger people, IRA rollovers, 401ks, to IRAs, and have compounding not for 10 years, 20 years, 30 years, even 40 years. It's pretty amazing. So let's sum up what we have on the income rider side. 4 basic income riders. The income outlook, that's kind of our go-to rider. No gain, no charge, 5% growth, great rates of withdrawal. We also have a very unique product called Income Protector. That is a fixed rate product with an income rider that has no fee. And not only that, your client can take income, and the growth rate on the income rider continues, plus the payment base is a death benefit as well with no charge for the rider. Pretty amazing. We have our dynamic rider on our unique dynamic series. That's the one with the minimum 70% participation. That has a built-in rider that you only pay if you use it. Very unique, principal preserving. You know, this is something that is overlooked, Aly, I think, in the world of income planning. Right now, in the population of all annuities that have income riders attached, less than 20% are what I call incomatized, are actually taking lifetime income. So what are they doing? Why aren't they taking the income? They may never take the income, yet they're paying fees for that privilege. So here's a way to protect principal and ensure growth. And then if you use the income rider, that's when you pay the fee. If you never use it, you never pay. Fantastic. And then we have a performance-based product called the Revolution, and that has built in an income rider with no fee as well. So a lot of different options. The people at IMES know how our products work. You can reach out to them. You can reach out to our sales desk and find the right rider at the right time for you. Now let's talk about how we integrate income riders into our practice. And for those of you that are not in the income rider arena, here's a way to do it. Whatever you're doing, final expense, basic retirement planning, estate planning, these kinds of things. We've expanded our practice to include savings and retirement income services at no charge. But I need to see if you qualify. I need to ask you a few questions. Can I proceed? So this is a good way to just let people know what you can do. And those questions are these. Are you happy with the returns on your CDs, money markets, and savings, your safe money accounts? Are you concerned about the risk of loss on your retirement accounts? Man, 8-year, 9-year bull market, when is the bottom going to fall? I hope never, but we know that we have these cycles in the market. Have you established a guaranteed income plan yet? Yeah, you may have done really well on the accumulation side, in the asset gathering side, but how have you done on the income planning side? I can help, you can help with that. So let's get back to Polly's plan. I'm a guy that plays by the rules. I study, work, save, retire. That's what they said, right? Put a little bit of money away every day, every year, for a long time, you should be okay. And by the way, that's a picture of my, some of my family. We've added kids to our family over the years, but that was taken a few years ago when we were featured in the Austin Statesman on a neat little story about the adoption of my kids. So we do that. Now, I'm going to go back and really kind of reveal some things to you and some lessons to be learned in terms of that. So I've worked at a bunch of different companies. So at a time in the late 90s into early 2001, I worked with ING, and I had a 401k. Yeah, again, playing by the rules, put some money away every day. And I left that company in 2001, but I kept my 401k account there. And so why this is instructive, this is like a control group in doing an experiment. So in this 401k, I didn't add any more money to it. I established other retirement accounts with my new employer. But in this case, I just kept the money there. The account choices were really good, and it was great. So I rolled this thing up into late 2007, up to 139,000. Not only that, look in that lower left-hand corner. ING at the time, they would show me my rate of performance, 10.39%. Man, Polly is doing pretty good. Not only that, if you look to the right, I've got what I like to say is the pie. You see the pie there? Awesome. I've got diversification, small and mid cap, asset allocation account, large cap growth, global. You know, I didn't have a real estate option. I'd be in that as well. But man, what could go wrong? How could this, what could happen that would present a challenge here? Let's see. 2008 happened. And forces beyond my control, credit default swaps, collateralized mortgage obligations, the big short. I still had that diversification. I still have the pie. I lost over 60% of the value of my retirement account. And not only that, you know, that question mark in the lower left-hand corner, well, what happened to my rate of return? Remember that? There it is there. ING must have ran out of ink that year, because if they had put that in there, that would have said minus 65%. That's pretty stunning. Now, what do most people do? They panic. They get upset. They might sell. But I'm a student of the game. Hey, it'll come back. The market will come back. Hang in there. Fortunately, I was in my early 40s at the time, so I'm okay. It's all right. I'm going to hang in there. I'm not going to panic. And this goes to what I like to say is the diversification myth here. And this is something you need to educate your clients on, because they think if they've got the pie, if they think they've got a mix between stocks and bonds, they're diversified. They are not. They are subject to market forces. And I make the analogy, and you can use it too, my refrigerator is diversified. I've got milk. I've got soda pop. I've got fruit. I've got vegetables. I got frozen pizza. I got cold cuts. I got all kinds of things. But ladies and gentlemen, what happens to the food in my refrigerator if the power goes out? What happens to your clients' investments, retirement accounts, whether they're diversified or concentrated, whether they're in stocks and bonds or the proper allocation between the both? If the power goes out, if the market goes down, all things get spoiled. And just for funsies, here's how some things will last. You know, if your power goes out in your refrigerator and you got some fresh salmon in there, better put it in the grill or get it fried up real quick. It's going to spoil quickly. So this is the point about diversification. You're not diversified if you're still in market influenced assets. You need to be in non-correlated, or have some that can provide the guarantees that only the insurance industry can provide. Now, of course, what is the advice? Stay the course. The market will always come back. But we forget about the cruel math of losses. If I lose 10% in something, I have to make 11% to get back to where I am. 20%, I have to make 25%. 30, 42%, 50%. If I lose half the value in an account, I have to make 100% rate of return to get back just to where I am. So ultimately, I like to use this analogy. My wife's a big Patriots fan, and that is your clients are doing great. Everything is good. I wouldn't frighten them. I would encourage them, say, hey, you did really great, but how would you like to stop the game while you're ahead? Imagine if the Atlanta Falcons could have done that a few years ago, late into the third quarter, leading 28-3 with New England. But they didn't. They kept playing the game, and things happen. If your clients don't do that, stop the game while they're ahead, bad things will eventually happen. The other team is going to score. So this goes to the fact that, hey, things are going well, but what do you think is going to happen? And I'm not a doom and gloom guy. And, you know, we can handle market corrections. We can handle recessions. It comes back. But the one thing that most of your clients don't have is the luxury of time. So prepare now. Congratulate them. Hey, you got good advice. Now let me give you some advice now. Stop the game while you're ahead in the score. So you can say, hey, you earned it. Now keep it. You earned it. Now spend it. You did great with accumulation. Now let's get the distribution you deserve. Always know that markets will come back eventually, but do you have the luxury of time? And this is something that, again, I measured that time, that account going back to 2008. It took another 4 or 5 years just to get back. Remember, I had about 139,000. Well, there's two ways to look at this. I had a 65% gain between 2008 and 2013. Remember, this is the standalone account, or I was still 3% beneath. And believe me, I still had that diversified pie. So what did I get? And this is what I love about the market. They go, oh, the market did this in this period of time. The further back you go, the more you will realize that those rates of return, when isolated, did not hold true over time. Indeed, the 2000s, 2000, 2001 to 2010, by many investor experts, is called the lost decade. If you had had 100,000 in the market, or in this case, 1 million in the market at the beginning of 2000, at the end of 2010, you'd be basically down by 10% because of the market forces, the black swan event of 9/11, the financial meltdown of 2008. You would have been better off in doing 60-day or 1-month treasury bills. And this is the thing. Over time, markets will rebound. Over time, markets will perform. But that's the key. It's over time. Now, meanwhile, while all this was happening to my standalone ING 401k, I had put some money when I came to National Western Life, basically over the same period of time, 2013, as you can see there, 2004 to 2013, in a National Western Life off-the-shelf fixed index annuity. And I happened to enjoy over those, gosh, it was 2004, 6 to 3, 9 years, an average return of 7.39%. Now look at that in contrast to my 401k with all the diversification, market forces at work. I was down 3%. So that said, maybe it might be a good place to put a little bit more of the money. Now, this is something that I need you to open your mind to, the retirement reality. Despite the lack of retirement savings, The majority of retirement funds are in the hands of people under age 55, like I was during this process. But they will have to plan for themselves with your help. And that's where you keep in mind what National Western Life can offer. We can offer income riders on younger people in their 40s and 50s. That group of the population does not have the safety and security that our parents had with pensions and confidence in Social Security. So you have that ability not only to service if you're working the senior market with the sons and daughters, your neighbors, to help them with retirement income planning. So let's talk about Polly's plan here in the next 5 to 10 minutes as we've come up to the end here. So what was my plan? Pension, Social Security, 401k. Now, I happened to get a pension from National Western Life. That's one of the reasons I came to work here back in 2003, but they froze it in 2004. But nonetheless, I got a little bit of a pension. I'm one of the less than 20% of the working population today that has any type of pension coverage. I also get Social Security, and I'm not a doom and gloom guy about Social Security. You know, they may make some adjustments, but that is too big of a bundle for our politicians to bungle. So keep that in mind. I think we'll be there. I think we're okay. So, you know, the majority of Americans are still relying on Social Security as their foundation of their retirement. And then what I did is I put that ING 401k into a product with a bonus and an income rider. And after 8 years, I got back to where I was at the end of 2007. Pretty cool. And that, guess what? No fear, no worry that will ever go backward. It's only going to go forward. So super cool there, and that's one of the advantages of real premium bonuses because it does reflect in the account value. So then add the income rider, and this is what's amazing. Whether you're 20, 30, 40 years old, you can, with specificity, know to the penny what your minimum guaranteed payout is. So now I had the three-legged stool of retirement: pension, Social Security, and a savings and income plan I could put into place. So adding it all up, got a little bit of the pension, my Social Security, my income rider, and don't forget the lovely Mrs. G. You saw her on the couch with me. She's got Social Security too. And so if I hang in there to 67, and that's getting closer and closer every day, 8 years away to 67, I can expect guaranteed an income of $75,000. Now, this doesn't take into account the other plans I've established, my real estate wealth that built into my house, the home equity, all those kinds of things. Now, I live here in Texas, near the headquarters of Austin-based National Western Life. You know, with $75,000, I can get myself a nice double wide, go fishing, go to McDonald's. Life is pretty good. And so I've got my basics covered. And this is real critical in understanding how things work. Now let's go to where we are today. Let's look at the performance of that underlying index annuity. I came in there with about $128,000. Right now, the value is $172,000. Made a little bit of less than 3% over that period of time. That's my accumulation value. Now remember, I put $128,000 in. I got a bonus, and this rate of return does not include the bonus. Otherwise, it would be well over 3. But even after 5 years, my surrender value is far in excess of what I put in. So, you know, a lot of times people are concerned about surrender charges. You know, generally, with a little bit of performance with the bonus, the surrender charges on your client's money are neutralized in just a few years, as you can see here. Now, I bought this for the income rider. My income base is closing in on $190,000. That's pretty cool. And also make note, and this is what distinguishes National Western Life, I was actually able to put in some additional premium over the years as well, because at National Western Life, all our products are flexible premium. Not so with many of my carrier competitors. So all pretty strong here in many regards. So let's make some observations. With my plan and what the plan you could do with your clients if you worked with National Western Life through IMES and Aly, additional contributions are allowed. There's no surrender charge on my money, 5 years in. 140,000 in total, 150 out, 8,000 if I wanted just to pick up and go home today. There's no rider charge unless I made a gain. There are a couple of years where I had some zero hero years, no charge. So I'm only paying if I'm making money. And with my plan, my wife, if God calls me home before retirement, my wife can do a spousal continuation and take over that income rider. It will still accumulate. And not only that, she could change that joint payout, which I've done with my rider, and make it a single life payout to get the higher rate of withdrawal. So all these things you can do for your client, particularly if you're working with National Western Life. So how do we come to a close here? Retirement planning made easy. You have online tools that can take out the guesswork with retirement. You can know what your Social Security is, what your client's Social Security is going to be. You have these amazing resources from IMES, the calculators, the analysis, the point of sale tools that they have. Just add up the numbers like I did. And here's the thing that I want you to take away from this discussion. With income, people think monthly. They know what their basically their monthly nut is. They know what their bills are. And, you know, a lot of times I think we can scare our clients saying, well, you need to put $338,000 away. No, what you need to think about is using these amazing products. And keep this in mind. There is no other element in the financial services industry that can do what you can do right now, which is guarantee income, guarantee a payment stream, even if the underlying asset goes to zero. Nobody else does that. And this is the amazing thing. These are longevity benefits that can never be depleted. That's what's amazing. So keep in mind that a lot of times it's not $100,000, it's $500 a month. It's $600 a month. Think of your clients. If they just had a little bit more coming in monthly, well, how would that affect the quality of their retirement? What worries could you remove by doing that? And it's fairly easy to do by using products like National Western Life's or the other great products offered by IMES that offer true bonuses, nice roll-ups, high rates of withdrawal, and come from a company that's impeccable in its financial strength. You want to retain gains and avoid losses and use income guarantees. That planning is easy. If you stayed away from this because you're worried about it's too complicated, hey, I've expanded my practice to include savings and retirement income planning. Just like to ask you a few questions to see if you qualify. Would you like an income that you can't outlive? Are you happy with the returns on your CDs, money markets, and other safe money accounts? Do you have an income plan yet that's guaranteed? You can provide that using the tools and resources available to you from National Western Life and insurance agents, marketing services, and the great and amazing and endearing Aly Campbell. Aly, back to you.
Thank you so much for that, Paul. That was a great presentation. We're going to switch over back to my screen here. I'm going to launch the last poll question here, which is, would you like some more information on the things we talked about today? That is up there now, so if you could just answer that. I think that this is an extremely important topic to talk about with your clients, especially right now with how the market is. You want to make sure that you're protecting your clients' principal for their retirement. If everyone could just go ahead and answer that poll question. I'll leave that up there for about 30 more seconds. Thank you all for joining us today. Again, I will follow up with each and every one of you after this, see if you have any questions, and I will get you some more information on these income riders. Like he said, there's some pretty awesome income riders. The one with no fee, we do see a lot of times clients are paying for a fee and then end up never using it. So that's a really unique option out there. Perfect. I will go ahead and close this up. Thank you all for joining us.